Hey, folks, welcome back to Money and Politics. And here we are on a Thursday. And the week has gone by so fast because of the 4th. I'm always a day off still. And I sometimes say this is going to be a short video. This probably will be because I'm really, on one hand, coming to you without a whole lot of news. I don't think there was a whole lot of news today in the market. The market was down some, and it doesn't really again matter. To me, this is one of those days where people who are on the networks, they'll do their show. They get people to come on. The analysts love to be on TV, love to have their name out there, which is understandable. But, they'll be asked, well, why did the market go down today? And frankly, folks, most of the time you don't know why the market goes down. I mean, because more people sold than bought. I mean, that's the simple reason. So when we look at the market, an awful lot of what I'm telling you, or what I'm telling you, is that an awful lot of what we hear about what the market did on any particular day is stuff you can just ignore because it's the TV shows needing to fill airtime so they can sell commercials. And between the commercials, they got to put something on the air so they get people to talk. And when you're asking them, you know, why did the market go down? Why did the market go up? Some days if the Fed cut rates, the Fed raised rates, it's an obvious answer. That's the answer. But a lot of times you just don't know. So I will remind you that a few weeks ago, everyone was down on the market because we were going to have high inflation, which I think is still a risk personally. And then, 3 weeks go by and all of a sudden, oh, I don't know. I don't know if it's going to be inflation, and the inflation fears wane. Why did they wane? Nothing changed. It's just, this is why I say so much of the smart money on Wall Street isn't smart. It's, they don't know anymore 90% of the time than you or I. And I'm also reminded that Warren Buffett, probably the best investor uh, still in the business today, works from Omaha, Nebraska, because he often says he doesn't want to be part of the New York crowd and get caught up in all that noise. And one of the real lessons I think I'm telling you here is that in the midst of all the noise, in the midst of all the networks covering, and I'm happy to watch them. I like watching Charles Payne and others. But it means that what I'm telling you is that the information that you need is available to you online at your fingertips. And as a small investor, you can do quite well. And you don't have to be some guy who went to Wharton and is working for some firm on Wall Street. You can just be some guy from Poughkeepsie, you know, uh, and you can do well investing your money. One thing I've showed you before, and I just want to bring back up briefly along these lines, is the S&P, the chart of the S&P over a 50-year period. And as you can see, this is where we go from 1970 to the year 2000. We had some dips. One thing that's interesting, if you look at the year 1990, I wish I had a marker on here and I don't. But if you look at, there's a little dip to the left of the 1990. See how it went up and then fell? That little dip was the market crash, the big market crash of 1987. And that was an incredible fall. That was a fall of 25% at the time it happened. Isn't that amazing? I'm going to go tight on this. And there you have it. Just between 1985 and 1990, that little blip. And that's where everyone thought the world was coming to an end. Oh my God. Oh, the world, we fell 500 points. And that's when the market was 2,500. And we fell 500 points in one day. That was like October, I forget the actual day now, but October of 87. I remember I took the day off from work. I was at an antique store with my wife at the time, and we heard that the market had fallen. And then you see the rest. And look how we went up in 2000. We got the internet boom, and we hit March of 2000, and boom, we went down, and we went down hard. And then we built back up, right? Through the time with George Bush in the White House. And then we get, let me see if I can raise that a bit so we can get this, the years. So you see the peak there in 2000, and then bang, we go down. But what do we say? Buy the dips, and then we go back up. And then right in 2008, we hit the real estate crash and fell hard again. And then what happened? 6 months later, in March of 2009, that was the bottom. And then we went up and up and up. And so as we talk about the market crash of 1987, which you can barely see here, when we talk about the bust of the internet bubble in 2000, March of 2000, and then we came back up, and then we had the burst of the real estate market, which was a real economic problem there. But then we came back up. And so the bottom line, folks, that I'm going to just be telling you about, and I think this is good to revisit this, and the lessons that doesn't this put it back into some sense of where we are now. We always think that because we're told to think this, that, oh my God, this time is different. This time we're going to be going to hell in a handbasket, and we're not going to recover. And then, we ought to buy gold, right? Get ready, market crash is coming. Get ready for the end. Buy a cabin in the woods, buy guns. It's a bunch of hogwash, folks. The chances are great that nothing untoward, we might have a market crash, but so what? The thing is, build up some cash, have some ability to manage your affairs to where even if the market crashes, what happens when the market crashes? You're looking at 50 years. It comes back. So if the market crashes, don't worry about it, right? Don't worry about it. And when we go up and you got some good money, take some money off the table now and then. You always should have some cash available. And the way you do that is you sell some shares and you build up cash. Sometimes you're going to use some stocks, and this is probably also something I should talk about, where you don't buy them for the long term, you buy them for the ups and downs, and we have different stocks that you can do that with. But what I really would have you take away from the 50-year story of the S&P 500 and all the history that is in there is that you, as a common investor, if you hold over time, time is on your side. Time is on your side. And don't think that, you're going to be getting rich quick, that you can jump in. I mean, have some people done it? Yes, some people have done it. But, some people have won the lottery. That doesn't mean that you should be playing the lottery. The way you build wealth is by buying stocks in good companies and allowing them to grow over time. I wouldn't put all my money into any one company. I wouldn't put all my money into Humble. I wouldn't put all my money into Cisco. I had other stocks at the time. I made money on those other stocks. I mean, EFII, I made money on. AOL, I've made money on. You know, I almost have to go back. Sometimes you'll look through your old statements and you go, wow, I forgot about that one. So you can make money over time, number one. Number two, don't worry when the market goes down. Rub your hands with glee and buy. And when you buy, don't buy all at one time. Don't buy all at one time. Don't sell all at one time. That's one of the greatest tools. If you remember something, almost anything I would ever tell you, remember that. Don't buy all at one time and don't sell all at one time. Because if you buy all at one time and it goes lower, you're going to be going, oh, just my luck. No, if you buy and it goes lower, then buy some more, especially if it's a good, solid company, which is why typically I never buy the penny stocks. I want them to kind of prove themselves first. Anyway, I won't go on and on. What I wanted to say is, on a day when there wasn't a lot of news, it's good to look at the 50-year chart of the S&P 500 between 1970 and 2020, and to say, look at all the history in there. And all the time within those times where the market went down, when people were wringing their hands, when people were saying, oh my God, the world's coming to an end. Oh, this time it's different. This time we're going all the way. You better, batten the hatches. The United States of America is strong, and over time we have become stronger. And over time, the world economy is stronger. And over time, we have more information at our fingertips. And so we are so much better off as investors than we were in 1970, than we were in 1985 or 1987. And so you have a much better chance as an average investor today of building wealth over time in the stock market than ever before in human history. And so keep that in mind. When you have down days, when your stocks go down, just put it in perspective, okay? Put it in perspective. One last time, you're going to end up winning if you don't panic in the short run, okay? And with that, folks, I'll let you go. As always, have a wonderful evening, and I will look forward to talking to you again tomorrow.